How does artificial intelligence and blockchain play a pivotal role in revolutionizing old-school banking?
Good afternoon, everybody. I'm going to welcome my panelists in a minute. Thanks for being here. It's a real honor to be here on the AIBC big stage. How's the sound back there? Can you hear me over there? Yes? Okay, good. So sitting with me on the stage today, I'm going to welcome, first of all, Singh from the Abu Dhabi Commercial Bank, ADCB. Hi, Jay.
Hi, all. Hi.
In a minute, I'll ask you to introduce yourself properly. Next to him, we have Niraj Kumar from United Arab Bank, UAB. And then we have Jorge, but I really struggle to pronounce your surname, Jorge. One more time, Jorge.
Jorge.
Jorge. Well, thanks for joining me today. It's a real pleasure. As introduced by Bhargava just before, UAE Trade Connect is a applied blockchain technology. It's working very successfully in the UAE. And that's why we're here to talk about how AI and blockchain can be applied in the old school world of banking. So before we begin our questions, I will ask Jay to introduce himself and what he does in ADCB.
Good afternoon, ladies and gentlemen. Welcome to the conference. Obviously, we're delighted to be here. I'm responsible for trade finance business for ADCB. Been in this business for 25 years in various parts of the world. Been in UAE for the last 5 years running the trade finance business for the bank. Looking forward for meaningful conversation. Hopefully, it will add value to the discussion.
Thank you. Thanks for being here, Jay. How about you, Niraj? Introduce yourself.
Yeah, hi. Am I audible? Yeah?
Yep.
Okay. So I head the global transaction banking at United Arab Bank. UAB happens to be one of the oldest banks in this region, 47 years now. And thanks for having me here, Zul.
Okay, thanks for being here. Appreciate it. Jorge.
Thank you, Zul, and thank you, everybody, for attending this panel. I've been around 7 years in the country. The first 6.5 working for Etisalat and being part of the UAE Trade Connect that was presented before. It was an honor to be part of that and see how enterprise blockchain and consortiums were created in the country. And now I work for FTI Consulting as the managing director for the region, supporting the entire ecosystem on these matters. Thank you.
So this is your normal stomping ground, is it? This environment is what you're used to now. Okay, let's begin our panel. We're going to be talking about how the advanced technology like AI and blockchain is potentially disrupting and potentially enabling the old school banking business. I'd like to invite Jay. Jay, you are part of one of the largest banks in the country, one of the largest banks in the region. What do you see as the disruption potential of these technologies?
Thank you, Zul. Probably I'll start off with my own experience altogether and then obviously come to the point itself. I remember the days probably about 20 years back, or maybe 15 to 20 years back. My manager came in and said, would you want to explore ghost systems that do the data input and then facilitate your trade finance business? And I was thinking maybe he's dreaming. I was also thinking maybe he's seen a ghost himself. And then I see myself sitting here talking about blockchain and AI. And obviously, a lot has changed. I'm a lot more informed. And we learn all the way. So I'm not sure that I'm a right person to talk about AI and blockchain. There are a lot of competent people in this room who probably would be a lot more insightful on the subject. But from a use case point of view, I do see technology has changed the world. The AI and blockchain, specifically in banking, has significantly improved or changed the ways we work in various different facets. From a banking industry point of view, obviously, we use the technology today to obviously serve our customers better. We do use it for risk management. We use for fraud. UTC is actually helping us in significant way, improving. And then Bhargav just talked about how the use case of blockchain is actually solving a real-world problem for us as banks and for our shareholders, for that matter. So the use cases are immense. Obviously, a lot more on the AI front, but again, when I talk about blockchain, my memory goes back to another such experience where we know blockchain significantly can improve trade finance as a business. Possibly a lot more to work with you to see how do we make it forward.
But what is it? What does it mean to you? Disruption or enabling?
To me, it's both, but I actually see it as an enabler. Disruption is good for business. If we do not disrupt our processes, obviously status quo is the easiest way to live, and probably it's not in the best interest of our clients if we don't really disrupt the industry. Enabler, definitely, some of this risk management framework that we're putting in obviously is helping us manage our risk a lot better. We probably would be able to serve our customers a lot better. So I see that as both enabler and disruptor, but more as an enabler than anything else.
Thanks a lot, Jay. Niraj, as a small bank, does AI give you an opportunity? Do you see this as a chance to maybe jump ahead, take some competitive advantage from your competitors?
Sure. A mid-sized bank. A mid-sized bank. All right. So a bank of the size of UAB, I feel is just the right size to use the AI and blockchain technology to provide better services, better product delivery to its customers. The application of AI and blockchain in today's world is immense, and there are a lot of areas where it can be used within banking. And I would say the three most important areas where I see this happening is, number one, chatbots. So powered by generative AI and natural language processing, banks can obviously use chatbots to do real-time, conversation with the customer in the customer service area. The chatbots can work tirelessly 24/7 and will eventually help improve our service offering to the customers. Second important area, what I see is RPA, or the robotic process automation, which I see as the future of the entire back-end processing for banks. We can use this in, let's say, form filling, loan processing, back-end, all sorts of data processing, compliance monitoring. The third important area which I see the technology entering into is with machine learning and big data analysis. And again, I feel bank of our size is just the right size to do big data analysis, which can be used for analysis of, let's say, transactions, for fraud detection and prevention, risk monitoring, customer behavior preferences, study of those, and thereby improve our customer service delivery.
But let me double click on that for a minute, Niraj. I can understand if Jay says to me, I've got many, many hundreds of thousands of customers, so I can find machine learning, I'll apply machine learning and find patterns. With a bank of your size, does it make the same sense?
It does, in the sense that my size or a mammoth like ADCB, all of us are sitting on, a huge mine of data, which is just left there unanalyzed. And by virtue of having access to that data, which is unanalyzed, and if we use ML technology, we get very rich information about the customer preferences for sure, which will help us improve our services, definitely. So And coming back to your question, do I see AI technology help us leapfrog the larger banks? Well, yes, I do, because technology, we cannot compete with banks like ADCB on anything else, like assets or anything, except technology. And this is the great leveler that I see in today's world. Using technology, we should be able to offer better services, better products to our customers. And this is one area which I see we must leverage.
Absolutely. Thank you very much, Niraj. Now, Jorge, as a specialist in blockchain and advanced technologies, as the managing director from FTI Consulting, can you give us a view of what's happening in the wider world outside of our region? What are the things that are coming into the market now in the US or in Western Europe, which might find their way into our market over time?
Yeah, sure. Thanks, Sul. So, first of all, the financial industry, even being the one that was supposed to be the most disrupted one across all the industries with blockchain because of the decentralized finance paradigm, etc. So it was the industry that was capturing the blockchain opportunity from the very beginning. So following the enabling or disruption is really both. And we've seen how banks all over the world have been joining consortiums for trade financing, for know your customer, how here in the UAE this has been a reality for many years now. And now with all what's going on about the tokens and the coins being securities or not, so and the central banks having to find a response to that. So all the main central banks from all over the world have been experiencing with central bank digital currencies. And once those central bank digital currencies, blockchain-based or not, will be a reality, banks will have to operate with those central bank digital currencies. And this is precisely where the banks all over the world are currently exploring how are they going to deal with this. First of all, they need to start operating with token-based coins, right? So that's something completely different to operate rather than fiat currency. And then they will have to be custodians of crypto assets in many cases. So how a bank is going to have custody on all those assets, how a bank is going to be the bridge between people getting cryptocurrencies, converting them into central bank digital currencies or stable coins, and how the bank is going to serve as a bridge or fill that gap between that crypto world and the regulated world. And I see banks not only internationally but also regionally and locally learning and understanding how are they going to deal with the stablecoins. So I think that will be the next wave of innovation introduced by the banks to the system.
Okay, so can I challenge you on that and invite the other two panelists to jump in? Are you saying that banks can play that role better than the new challenger exchanges and custodial companies?
I think the answer is of course, because the banks know perfectly how the financial ecosystem works. They are fully regulated, they bring trust, and I think everybody in this room is aware of what is going on right now in the industry, where regulation is so important so that people don't get caught on having their funds or their money in unregulated entities, that ultimately when bad waves happen in the market, they have to file for bankruptcy, and then the government needs to intervene to secure the deposits, to do all those things, right? So banks are adding this trust so that if people want to get the benefits of instant remittances, get the benefits of lower fees that a crypto-based or a token-based coin brings with it, banks can add that regulated approach to serve the community, serve the citizenships to answer that need.
Jay or Niraj, do you want to comment on that? Are you ready to play this role?
It's a double-edged sword, actually. So yes and no. Yes, because obviously tokenization and all obviously provide another secondary source of investment opportunities for a plethora of other investors who would want to take, in my case, trade finance assets. And therefore, it creates another market to be able to position my assets to an investor class, which today we probably will not be catering to. No, because I think we are still far from the journey of being able to digitize these assets to be able to create tokens out of it. So that's the challenge that we have internally. Maybe 3 years hence, I'll probably say it differently. So there is obviously in my mind, there is a proof of concept. Yes, there is opportunity to work bilaterally and see where we can actually find that opportunity. Consortium would probably be the next stage. In this case, particularly the UTC example, there's a consortium running and it's probably working well. Industry standards would be next. We don't have that. And therefore, to create an ecosystem which will work across, you need some industry standards to be able to create that investment opportunity and have partners work. So to that extent, it's a challenge.
Okay,
I,
good.
I would like to add another comment because regulators sometimes they don't know if banks will go fast, who will end first, if banks implementing technology or startups and technology companies implementing regulation. So I think it will be the former. Why? Because the market is going through cycles, and in every cycle, the technologies that are trying to implement regulation and they are not there yet, they are wiped out.
So I have something to add here.
Yes, please.
It's okay.
So the entire premise of cryptocurrencies as they came into existence was deregulation. I hope whatever Jorge said, it gets fulfilled. But the moment, and I be the devil's advocate here, but the moment it comes under the umbrella of banking and regulation, we wish instant payments to happen. But those instant payments make it tokenized, make it the fiat currency what we have right now. If it is banks, it will always go through the process of our compliance and everything, right? Those things will remain the moment it is with banks. So I hope what you're saying gets fulfilled. I have my doubts.
I think there's a lot to be said for the amount of trust that the community, that the countries, that the population has in the banking sector. Jay, let's move on to a new topic. I understand that ADCB is now expanding internationally, and you will be opening new corporate banks in different countries. Can you tell me how a greenfield operation might be different to some place where you're well established? What does it mean when you don't have a data lake to start with?
To start off with, let me acknowledge that banks have had legacy systems, and those legacy systems work in a certain process. And obviously, it's a challenge as we evolve and embed these new technologies, that there is a change process, and there will be a up and down in terms of how the technology gets embedded in banking systems. How it has actually helped or will help ADCB in terms of new rollouts would be that obviously you're not starting with a legacy. You get an advantage of using the best of what we are entering into, which will be probably process changes within the existing organization. But in the new place, obviously the time to market will be a lot more faster. There's a lot more data obviously available in the market without us actually having to have our own data itself. When you talk about corporate clients, you do know what corporate clients are available in that particular market. We probably are already serving them based on existing network that we have today. And therefore, being there in that particular market actually helps us to serve them better and possibly grow that relationship. So to me, I think it's only going to accelerate our penetration in those markets. And obviously, technology is there to help us to
Which are the countries that you're expanding into?
Some of it is not public knowledge, so I'm unfortunately not able to disclose the names. But the concept would remain exactly the same.
But would you say that in those countries that you are going to, there is more or less contextual data available to help you with, for example, credit rating, etc.?
Absolutely. See, these clients, as I said, majority of them we are probably already supporting them, but supporting them out of UAE. And being present in the market obviously helps us to provide them that service real time on ground. And some of the stuff that we are not able to do because we are not present in that country actually helps us to solve those barriers to be able to serve those clients better. Of course, when I'm talking about trade itself, it's not UAE centric, so we have that client flows. We know that the clients lot and their businesses. So obviously we would, in that sequence, be able to serve them better when we actually present.
Good. Jorge, let me bring you into this. Let's say you get an engagement from a bank which is expanding into some other countries. Greenfield operation. What advice will you give them in order to harness technology to give them an edge?
So I think every bank that wants to stay in business regionally or internationally in 10 years, they need to do 3 things. The first one is having a digital assets lab that allows them to test stable coins, technology, international remittances, if they are going to have an international network, how they are going to have a competitive advantage about that. Second, their compliance department needs to start knowing about digital assets. What does it mean? How does that change? How the bank will change? And third, don't try to learn from scratch something that is in the industry right now. Partner with experts, partner with people that can guide you through that process, that can get you up to speed, that can help you building that digital assets lab and guide your compliance team. Don't try to understand things from scratch because you are already late. So those 2 things.
Are you taking notes?
I to an extent agree, but to a certain other extent, there's challenges beyond the bank's own compliance as one of the risks in this process. What we are doing is basically starting fresh. So there's no point embedding the current system in a new country and then redesigning the whole process. What we are trying to do is, obviously the product remains the same, but how do we start with a brand new process and see what the goods of that process that we can actually embed in that country and bring it back to the country where you have a lot bigger client base, and any disruption in that process, unless it is so fully tested, would be counterproductive in your home market. So we're trying to do it a little differently, but I think I agree with him in terms of the broader context of where we can do better.
Thanks. Now, Niraj, I want to give you a blue sky question. Around this conference, generative AI is well discussed. Everybody's now talking about GPT-4. It's not long from now when artificial intelligence will be able to do the job of a professional banker. So where do the human beings in your profession go? What will happen? What value add can bankers bring in a world where AI is there to actually manage most of the transactions, most of the advice?
So the advancement in technology is for sure going to change the banking industry within a short period of time. And we must embrace this change. That's my opinion. We can't stop it. So basically, what we see is the change is already happening. So processes are getting outsourced to robots. I mean, we call them bots because these are not humanoid robots, but algorithms sitting inside our computer systems. And things are getting done efficiently, tirelessly, error-free. This is inevitable. This will happen. So does that mean we humans will lose our jobs to those bots? The answer, in my opinion, is no. Because, the repetitive tasks are best suited for a bot or an algorithm to perform. Where we add value is in terms of designing products and processes, our roles will evolve. It will not be, our roles will therefore not continue to be doing those repetitive tasks, but more into those skill sets which actually make us human. Let's say customer relationship management, right? Designing those processes and everything.
There's some people on the other stage who said that with the metaverse, relationship management will also be done by avatars and AI.
Well, I can't see into the future. At least I see, let's say, my particular job in corporate asset creation, which is lending, I do not see AI taking over very soon. I mean, there are many areas which are fertile for AI to, take over. Back-end data processing is one. My area, no.
How about you, Jorge? What do you think?
I want to add on that because, so ChatGPT, for example, it requires an input, right? You need to tell him what you want to expect out, as an outcome. So I don't think people will be displaced by ChatGPT or the technology, but they will be displaced by people using that technology, right? The input is always required. But if you are taking 30, 40 hours to develop a report, a strategy, something like that, somebody knowing how to use ChatGPT-like kind of things to do the same, they will take the 48 seconds average response time of ChatGPT, not the 30, 40 hours that you are taking doing that. And GPT tools are already generating very high quality and creative work around that. So you will not be displaced by the technology, but by someone knowing how to use the technology.
Okay.
It's more a matter of collaboration, not rivalry.
Right.
We have to embrace it.
So you will use it as a tool as opposed to substitution. Okay, gentlemen, we have 3 minutes left, so I'm going to give you each 45 seconds to answer the next question. I will stop you after 45 seconds. Let's start with Jorge. We know that old school banking is catching up. We know that the tools, the technology, blockchain, detection, generative AI, all of these things are helping the banks to modernize the way they do business and keep up with the rest of the world. How quickly is it before old school banking becomes new school banking? Is it 1 year, 3 years, 5 years? 45 seconds.
So I think it cannot be 10 years. Otherwise, disruptors will come in, all the school banking will be out. I think it will not be 1 year because it's really fast moving industry and all the school banking is taking time to catch up. So I think that it's more in the midterm of 3 to 5 years where we will see old banking or traditional banking institutions really serving the community with this kind of services.
Okay, good to hear. How about you, Niraj? What's your view? How long?
It's a complicated question, first of all, because there are many factors on which this depends. Now, like I said earlier, some areas within banking are fertile to embrace AI and machine learning and the robotic processes. Others are not, in my opinion, in as much as I know today. So, but still, the way technology is advancing and the pace at which it is advancing, I would tend to agree with Jorge. 3 to 5 years is the right time where we'll see a lot of significant impact happening.
There is a bunch of people in the next room which will say 3 to 5 years is a lifetime.
Is a lifetime.
Probably they've been already 1 year just trying to set up operations.
Exactly. Jay, how about you? What's your view?
Thank you, guys. I probably would agree with Niraj's comment. To me, I think there is a use case, but I think we'll be going ahead of ourselves if to commit to that we'll be changing things in the next 3 years. See, there's a whole element of regulatory framework. We need to keep that, we need to recognize that in banking industry, and that's for the benefit of the customers along with the banks. So I think that there is technology that can help us to improve and deliver quality services. We talked about ChatGPT, but if you see, if you have, any of you have tried really a WhatsApp banking, the challenges we still feel when we try to get answers on a WhatsApp banking. And that's something which is very blatant when I have tried it myself. Yeah. So to me, I think it's more of a 5 years plus when you'll see a significant improvement, but within 3 to 5 years, definitely a large scale.
Okay, thank you, Jay. So just to sum up, what we've heard today is that already old school banking is adopting, is bringing in many of the tools, leveraging the data that they have about their own customers and contextual information. And you're applying that in your day-to-day lives. You're improving your systems, you're improving your customer experience. From Jorge, the big challenge for the future is to become digital asset trans. Time's up, so we'll cut it there. Thank you very much.
Thank you.
Thank you all. Thank you.
Thank you, everybody, for being with us.